Okay, all right. So welcome to day one of our um October trading training, right? Welcome to our October cohort. So welcome guys, wherever that you are joining in from. I am excited that you are here, and I'm also excited that you've made that kind of commitment and decision to learn something, fill in the knowledge gap when it comes to the financial market. I would like to say that this is the best decision that you've made. I'm excited for you, and I'm rooting for you, and I know you're going to be successful in this journey. So welcome, guys. Welcome, everyone. Um, we have a couple of things to talk about before we get into our foundational stuff. So this is going to be twice a week, Saturdays and Sundays. Saturdays is going to be 6 a.m. Eastern time, and that translates into 5 a.m. Central time. I may have one or two people joining in from CST time zone, that is Central time zone, and I've got some folks also joining in from Europe as well, London, and then other parts of Europe. So yeah, whatever that translates into. And then GMT, I've got some people also joining from Ghana as well. So GMT time. So 6 a.m. I believe it's 10 a.m. in Ghana, right? So 6 a.m. will be 10 a.m. Am I correct on this? So 6 a.m. will be like maybe 10 a.m. Ghana time, and then Saturday morning sessions is 3 hours, guys. It's deep dive, right? We go deep dive, 3 hour session, and then Sunday evening session is going to be 4 p.m. Eastern time, and that will be about 8 p.m. or so at GMT, and it'll be 3 p.m. CST, Central Standard Time as well. So take notes of the time so that you don't miss out, right? You don't miss out on any of the sessions because, guys, continuity is key. We're talking about housekeeping also. I'm going to be talking about some few things here. You got to make sure that you are in this, right? You got your two hands, two legs, your head, everything all in, right? That is how you become successful. You don't show up today and you miss out tomorrow. No, you're not going to be, successful with this, right? So, take note of the timings and make sure that you set an alarm for yourself, right? If I were you, I'll set an alarm, double alarm, triple alarm, whatever, to keep your own self in check. That hey, by 6 a.m., 8 p.m., whatever time that it translates into your local time, you're gonna be here, right? I'm not the one that's gonna be calling you or sending you a WhatsApp message or reminding you, to be part of this. There's a reason why you paid for the class, right? And so make sure that you are here on time, and then we get through a couple of things. All right, so let's take a look at our roadmap. And this is not going to be the exhaustive, the entire thing that we're going to go into. There's so much more. There's a lot of topics that we're going to be talking about. This is just a snippet, right? It's just a snippet of the things that we'll be dealing with, along this journey. This journey, guys, is going to be about 2.5 months or so. Hopefully, I am really, really poised. I'm really, really, you know, working out things so that by 31st December, we are done with this. So that, if you guys are going to be here till that time, as you start the new year, you enter the new year with something new, right? Something new. And so for roadmap, we'll be talking about, introduction stuff, foundational stuff, the market, sectors. We'll be very basic, right? So this class, that's one of the good news, was one of the good things, right? It doesn't matter your knowledge. I've got some folks who have already started dabbling in it, but they still needed, they still need to learn it the right way. So that's why they've paid for the class. Some people, I don't know whether Sammy and other folks, from joining from Florida, you guys are here yet or not. But you know, some of you guys are already started dabbling in it, but you guys want to come to the school, and then take part of this training and learn it the right way. And I'm glad you made that choice, you made that decision, right? To come and learn it, learn this skill set the right way. So we'll start very foundational, right? Very basic, so that it doesn't matter your knowledge in the financial market or not. This is going to bring everybody up to speed, right, to that level. So from beginners level with zero knowledge, in the financial market, you'll still be able to grab something, right? So foundation stuff, we'll learn about the market, learn about the sectors. We'll continue on with market caps, and then we'll talk about tools, platforms, technology stuff. This is essentially, technology. We're going to be dealing with a lot of technology, tech stuff, platforms, etc. I'll be helping you guys set up all these tools and platforms, etc. Right? We'll configure different things and do custom stuff, etc. for your tools and platforms. So I'll be guiding you guys when we get there, right? So there's no need to rush, or there's no need to, you guys don't have any concern. You shouldn't have any concern, for now, because I'm gonna be helping you guys. I'm gonna be, I'm guiding you guys, when it comes to that. Fundamental analysis, interest rate, unemployment rate, GDP stuff. We'll talk about this, but typically what we're gonna be learning on this journey, you know, we don't really trade with news, right? Somebody saying something on CNBC, somebody saying something on Yahoo Finance, somebody writing an article. That's not what we trade with. But it is always good to learn those fundamental stuff. It's just for knowledge, right? I don't reject knowledge at all. It doesn't matter where it's coming from, right? So we'll get through that. And then this class, a key part of this class is risk management, right? A key component of this class is risk management. The market, it's not your friend. The market is not your brother. The market is not your sister. The market is not your auntie, your uncle, and what have you, right? And so, what is going to help us? We're going to put the odds in our favor. Is one of the indexes is going to be risk management, right? And so this is a big topic. When we get there, we will learn a lot more. And I'm going to structure it such that right along the class, you know, we'll be we'll be learning this not just first day, second day, or third day, or fourth day session, but at different times during this journey, whilst we're on our way. I'm going to be coming in every now and then with risk management stuff, so that it reinforces that topic. So risk management is going to be key for what we're going to be doing, because the market is not our friend. We need to be able to understand this, right? We'll talk about candlesticks anatomy. I'll touch on market structures, market timings, support and resistance as retail people will do, supply and demand, divergence, mastery, market formations, moving averages, measured moves, Fibonacci, top-down analysis, zoning process, trends, indicators, order execution fails, trade management, position sizing, trading as a business, brokerage sign up, tips and tricks, so many and so much more. There's a lot that I can go on and on talk about this in the financial market. But guys, we're going to be taking this, one by one, right? One by one day at a time. All right. Now, let's talk about the housekeeping notes, right? Let's talk about the housekeeping notes here. This is going to be very, very, very important, guys. Let's talk about the housekeeping notes here. If you're going to be successful with this, I want you to take note of these few housekeeping notes that I have here, right? And every now and then, I'm going to be sharing some few things, here and there. So, number one is what? Be on time. Number one here is what? Be on time, right? Be on time. What am I talking about here? You got to be in a class, 10 to, if you're coming in, yeah, I try to make sure that the Zoom is live, 10 minutes before the class, right? The class time. And so it is your duty to set an alarm, like I said, maybe, two alarms, three alarms, whatever that, you know yourself, even though you need alarms, you need about 4 or 5 alarms to get you ready. Do it, right? My point here is that be on time. Join the class 5-10 minutes early to avoid missing important announcement and instructions, right? You know, Typically, I kind of lock the class, and we'll talk about different things like that. I don't want to be getting beeps getting, alerts here and there that somebody is in the waiting room. No, no, no. You're gonna be distracting me, right? And I might not even, let you in. So you gotta make sure that you are here on time. Here is business, guys. We're not entertaining lateness. We're not entertaining that. So if class time is 6 a.m., EST, you gotta be here. That's how you make money. You're not gonna make money being sloppy and coming in late. No, you're not gonna show up late here, right? You're not gonna be successful with that. So be on time, 5-10 minutes early. You got to be in here. Number two is that have a dedicated, notebook or journal, right? Have a dedicated notebook and journal, right? Keep track of notes, key lessons, strategies, personal insight during the training. Make sure that you are taking notes, you are writing this down, right? However, you're going to take the note, whether by digital means, whether by an actual notebook. And I will advocate here. I'm a digital person. Those that know me, I've been in tech for years, and I'm all for digital stuff. But hey, guys, get a proper an actual notebook, right? Notebook and a pen, right? And then write something down. Number three is what? Ensure that you have stable internet connection, right? You know yourself. You know where you're connecting from. It's not going to be, you're connecting with, a hotspot, and your phone is hotspot is not connecting here and there, guys. We are very mature people here. I'm not the one that's going to be talking about how you should get connected, but you know, you're not going to say you cannot hear me. My internet is very good. My download and upload, speeds are, high. If I do a quick um, speed check, as I'm doing this, let me do a quick speed test over here. Um, my internet connection is good. So if you're not hearing me, if you're not, then that means it's you. You are the problem, right? You are the problem because my my speed is essentially good, right? So if you cannot hear me and you cannot see and whatnot, that means it is your problem, right? I just did a quick speed check over here, and my upload speed is 616 Mbps right now. That is for my download, and my upload is 603 Mbps. As I'm talking right now, as I'm talking about internet, I just went online to do a quick speed test, right? So, it's not going to be me, right? My download, right? That's it right here. I just did a speed check, speed test for on my computer right now. My download speed is 616 Mbps, and my upload is 616 as well. You know, also Mbps, megabit per second. And so it's not going to be me. It's going to be you. If you can't hear me, if you don't do anything, if you're not connecting with the right internet, whatever, that is going to be your problem. That is going to be your issue. And you make sure that you connect, you know, with the right internet connection, over here, so that you're not interrupted. It doesn't disconnect, and you're trying to connect back. And guys, you're not going to be successful with that kind of attitude. And that's all right. And then number four over here, as part of a housekeeping notice, but use a quiet environment, right? If you think that you're going to be distracted here and there, guys, we bring business over here. And so make sure that you reduce background noise and distractions. Use headphones if possible. Well, I don't know where you're gonna be as you're participating in this class, but make sure that you reduce background noise yourself. Make sure that you're in a clean, quiet environment. And then next point, I kind of I've already talked about this, but let me re-echo on this again. Join from a laptop or a computer, right? Trading platforms and charts are best viewed on larger screens, not phones, guys. Trading charts, trading platforms, and the things that we're going to be dealing with, and we'll be talking about, they are best viewed on what larger screens and not on what cell phone screens, right? Yeah, cell phones okay. Can look at it when you're an expert. When you get up, when we go up somewhere, you know, we become expert and professional, and we know what we are doing. You can get off. But for now, my recommendation is that connect with your laptops, connect on it from your computer, right? That's what is going to help you. All right. Download, require platforms in advance. So, we're going to be joining these sessions on Zoom. So if you don't have Zoom, and if you have problems with connect Zoom, make sure you resolve that issue right before our next session. That's going to be tomorrow afternoon. So make sure that your Zoom works fine. You don't have any issues with connecting on Zoom. Make sure that for those of you who are not aware, there are Telegram groups, WhatsApp groups. Apart from even this class group that you are in, that you have paid for, that you are in. There's also a general trade without tears academy WhatsApp group, and then Telegram group that I'll be sharing the link. You guys need to join those because there are a lot of announcements and things that I share in there on day-to-day basis as well. All right, so make sure that you are in there. You are part of these communities out there. Make sure that you join the WhatsApp group, the Telegram, the YouTube channel, etc. Make sure you are part of it. YouTube channel, for instance, every Sunday night I do a quick, I've started doing a quick market review, sort of to give people insight into what to expect, for some markets, right? So Sunday night, around 10 p.m. or maybe 11 p.m. or something like that, somewhere around that time, I go to the market and we analyze the market, from Forex, futures, etc. And we kind of put out there what to expect and the zones that we're gonna be trading, and if price action was to come to come to us, where we will likely execute the trade. So make sure that you are part of all these communities, right? Because that's where you're going to be informed about whether we're going live on YouTube, etc. Make sure the Telegram WhatsApp group, you are part of the Trade Academy WhatsApp group. All right. um it's not going to be required for you to keep your video on, but keep your video on, if it's required. It's help build a community, accountability, etc. Mute yourself when not speaking. Try to minimize distractions here and there, but make sure that you're not distracting us on this session, right? So when you join, you make sure that your mouse, your microphone is muted, so that you're not being you're not distracting us and distracting everybody, right? Stay engaged. I know we are in the digital world. I know you're joining on Zoom. I know about all this. And I also know that you can easily be distracted, right? Because you're joining right over here, and then the next thing you're already on Facebook, you're on Instagram, you're on TikTok, watching somebody who is dancing and turning and twisting and doing all sort of nonsense, right? And so here I try to let you, I give you heads up, right? I give you guys heads up that hey, stay engaged. By staying engaged, that means make sure that your attention is right here. Stay focused, right? Because it's easy, right? It's very, 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 very. You can easily get sidetracked, right? By looking somewhere else, right? So make sure that you stay engaged, ask questions, contribute discussions, and interact with us. When the time is due. Do not multitask, right? So do not multitask. Don't be listening in here and then you are also doing something else. You are feeding your child. You are washing the laundry. You are doing something else. You are also trying to get your school homework done. No, you're not going to get the best of this class, right? If you pay for this class, you pay several thousands of dollars for this class, and you're gonna get sidetracked like that. That's not going to be a good thing, right? That is not going to be a good thing for you. You're doing something else, and then you're trying to multitask, right? That's not going to be a healthy thing for you. So make sure that you avoid checking social media, browsing, and doing other stuff. Don't do that, right? It's not going to be good. All right. Um, this time around, I think I didn't do it, but my previous batches, I always send out, some pre-class assignments, video materials, etc., that people can review. But we'll go through some of them, ourselves one by one. So here, we don't have to, worry about that. All right. The next thing is respect the class time. I've already talked about it. Be mindful of the schedule. Keep questions focused, during Q&A session. So, what I try to do is that in order for me not to lose my thoughts, right? Not to lose my thoughts. Whatever I'm talking, that's the time that you guys going to be asking questions. So at the end of the session, right? Always at the end of the session, I dedicate about 10 minutes and then I'll open the floor. I'll give you guys the privilege to now ask questions. So if something comes in whilst I'm talking, whilst I'm sharing something, go ahead, write it down. This is why you need to have a notebook, you have a pen by your side, so that you don't also lose the question, right? You don't also lose it, because if I said something that you think you need clarification on it, you need me to further maybe explain something, it's always a good thing to do. But we will take questions, or I'll take questions at the end of the session, right? So when we're about wrapping up for the day session, last 10 minutes, I'll open up the floor and say, hey, questions. It's questions time. I want to hear from you, right? That is when you guys will get to chime in and ask all the questions, right? In there. Okay, all right. Now, as soon as you have a calculator, we'll talk about it. Prepare mentally, come with growth mindset, right? Don't come with, I know this, I know that, no, no, no. That's not going to help you. So come in prepared, mentally, right? Come with a growth mindset, ready to learn and apply. Ready to learn and apply. And I know I have people that have signed up, they pay money to be here, and they were already dabbling, they already started dabbling in some of these stocks and forex, etc. But they just what's happening, hey, they want to come and learn it the right way from me, and it's great, feeling that they want to come and do that. So make sure that you have that growth mindset, right? That growth mindset that in spite of all the things I don't know, I'm ready to learn as a beginner. I'm ready to learn from the scratch. Whatever that you want to pour into me, I'm ready to take it all in, right? All right. Charge your devices, make sure that your computers don't go off, etc. Some of this is basic, but I still want to be able to rehash on them. I want to rehash on them so that at least some of these things, right? Ensure your device is fully charged, plug in to avoid distractions, right? Stay consistent with practice. Apply what you learn through demo account exercises between sessions, right? I want you guys very consistent, right? Whatever that we will be learning in this journey, make sure that you start practicing early. Don't come in late. Don't don't start practicing when we are 10 sessions and 50 sessions ahead, and now you are now coming back to learn what when we start with something. Make sure that you get on it immediately so that you don't lose track, right? um Honor confidentiality. Respect the privacy of the group and do not share class content and recordings without my permission, right? Without my express permission. So when I share something in here and have the privilege and access to that, you do not have the right to share my proprietary product, right? This belongs to me. Everything that we're going to be learning belongs to me. I have done my research. I have done my own learning. I've paid $100,000 to be able to learn what I know, today, and so it belongs to me. And so if I've not given you express, consent, I've not consented to it, you cannot do that. You cannot share things out here without me saying yes. Go ahead and do that, right? If it's something that I want you guys to share, it's okay. All right. Track your progress, right? Use a spreadsheet, a journal, log in your learnings, practice trades, questions, etc. Be able to track your own journey, right? And then keep questions relevant. Save unrelated and personal questions for one-on-one sessions, right? If offered, right? So I don't want you to get sidetracked again by asking questions that are not relevant to the topic. If today or tomorrow or in the next sessions, right, we'll learn by topic, stay relevant, right? Let your questions be relevant to the exact topic that we're talking about, right? If you're going ahead, I'm gonna politely say that now we are not dealing with that for now. We'll come to that, in the future, some of the other subsequent sessions. That's not what we are talking about today, and we'll stay. We'll constrain ourselves to the topic of the day and not something else that you have seen somewhere. You know, if that happens, we're going to get ourselves into a rabbit hole, and I don't want us to get into a rabbit hole. Rabbit hole means there's no ending. We'll start talking and talking, talking and babbling and lollygagging, and we start going down rabbit hole, and there's no ending to that. Then no, I don't want to do that. I don't have the time to do that, right? So keep questions relevant, save unrelated or personal questions. It's a one-on-one. Whenever you get a chance to maybe do a one-on-one session with me or whatever, then we can talk about some other, parking lot, items like that. But for now, whenever the opportunity is given, make sure that you stay relevant to the topic, right? Okay, all right. Um, the last thing over here is believe in the process, right? I know when you're starting anything like this, um, there are a lot of ifs, right? A lot of ifs, doubt, self-doubt. Am I going to be successful with this? Hey guys, believe in the process, right? I want you guys to believe in the process. Stay patient, right? Stay consistent, trust the journey. You are building a lifelong skill, right? Here, if you are here, you're watching this video, I'm going to tell you, this is not a microwave type of, overnight type of millionaire. No, we are building and developing a lifetime skill set here, right? Lifelong skill set here for financial freedom. And so We're not going to cook something just, like a drive-through or a microwave type of thing. No. We're going to take our steps, baby steps, one by one, precept upon precept, topic upon topic. We're building ourselves, in that direction. So, um, believe in the process. Don't be in a rush. Don't be in a haste. Don't try to say, I'm trying to make money here. I'm trying to make money tomorrow. No, that's not what we're trying to do here, right? you know. And I feel, as a matter of fact, as I said, I mentioned, in our risk management, we get about risk management. There's so many things that I'm going to be unpacking, right? Because the things that I did when I was starting this journey way back 2017, 18, some things that I did emotionally that I do not want you guys to do it and lose money, right? So believe in the process. Don't be in a rush. That is how you guys will stay consistent and be profitable, in this journey. Okay. All right. So once again, thank you and welcome. And all right, we've gotten through first, housekeeping notes. Are you guys here still with me? Hopefully I didn't put you guys to sleep, right? So let me see in the comment section. I want to see a comment from everyone. Say yes, 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 to know that I am not talking to myself and you guys are listening. So everyone, I want to see that comment right now. Yes, 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 to let me know that you are here, you are alive, and I'm not talking and chatting by myself. All right. I don't want to see this from just one person, everybody. So everyone go ahead and put a yes in. I'm watching the chat space, trying to make sure that, I get a yes from everyone, so that let me know that you are here and not somewhere else. You're not distracted. You're not on Instagram. You're not on TikTok dancing, right? So put a yes in there to make sure that you heard me, and everything that I've gone through right now. Okay, all right. Let's move on. So day one, all right, one, day one here, day one. So day one, foundation stuff. Let's start talking about how does the market works, right? Let's talk about how the market works, guys. Let's start with the basics, right? How the market works. Start with the basics here. So the financial market, is a global system, right? The financial market is a global system where individuals, institutions, and governments, they buy and sell financial securities, right? Financial securities like stocks, bonds, currencies, right? And commodities, right? These markets enable capital flow from investors to entities, right, that need funding. And in return, investors can earn profit based on what performance, speculation, and market movement, right? So that's how the architecture of the global financial, market. The market functions through a series of exchanges, right? There are so many exchanges around the world. As a matter of fact, we have even Ghana Stock Exchange, right? We have New York Stock Exchange, we have the London Stock Exchange, we have so many exchanges around the world, right? So the market functions through all these exchanges around the world, right? And platforms where buyers and sellers can connect, right? They connect, buyers and sellers connect on these exchanges. You know, these transactions are facilitated by what we call brokers, right? So brokers and then clearing houses and then market makers who ensure that there's smooth order execution and price stability here. So market functions through what series of what exchanges around the world. There's so many exchanges around the world, like I said, right? So many exchanges: London Stock Exchange, New York Stock Exchange. There are so many of them, Nasdaq, etc. Right? They're all exchanges around the world where they bring together buyers and sellers for them to trade, right? Yes, I mentioned that there are so many exchanges around the world, but there are major financial exchanges, right? We have major ones, right? And for the major ones, what are we talking about here? So we have major ones like the New York Stock Exchange, right? The New York Stock Exchange, the NYSE. You guys may have seen this, you've seen pictures, the New York Stock Exchange, heard about it from the news, CNBC, from the business news, you've heard about the New York Stock Exchange. So the New York Stock Exchange basically is the largest stock exchange, market, by market capitalization. They are the biggest, right? It's also the home to major U.S. companies like Apple, Coca-Cola, Goldman Sachs, etc. They all trade on the New York Stock Exchange, the NYSE, right? And then we have the Nasdaq. Nasdaq is also another exchange as well. It's also based out here in the US as well, known for tech stocks. So most of the tech stocks, most of the tech product, etc., they're all traded on the Nasdaq. So Microsoft, Amazon, Tesla, etc., is an electronic exchange platform as well. Nasdaq. We have London Stock Exchange, right? The LSE. We have the London Stock Exchange, which is the LSC. The LSC is one of the oldest stock exchanges, also as well located in what? In where? In the United Kingdom, in London, right? And then we have the Tokyo Stock Exchange, right? Tokyo Stock Exchange, that is the TSC. It's also one of the major exchanges in Asia, right? So the Europe, when it comes to Europe, that is the London Stock Exchange, is the biggest. Even though we have some other exchanges in Germany, etc., but they're not as big as the LSE, right? London Stock Exchange. And then we have the Shanghai Stock Exchange as well, as the Hong Kong Stock Exchange as well. These are all key exchanges in Asia, China, and other parts of the world, right? I forgot to mention that, during this training as well, we do take short breaks, right? Some 5 minutes breaks, right? Because morning sessions are like 3 hours. And so every hour, typically we'll take like a quick 5 minutes break and come back, right? So that you can get up, you know, walk around a little bit, make sure that, you're getting some type of, stress and not sitting down for straight 3 hours, right? So I forgot to mention that. All right. So these are the major financial exchanges around the world. So many of them, right? But here are the major ones. Okay. All right. Now let's start with some basics here. Um, let's have some basics here. So what is a stock? What is a stock? So a stock, also called an equity or a share, represents ownership in a company. You know, represents ownership in a company. When you buy a stock, you're essentially buying a piece of that company, right? So, for instance, if you buy Coca-Cola, you buy Apple, you buy maybe Tesla stock, you are essentially doing what? Buying a piece of that company. You are an owner, part owner of that company, right? So, if the company, performs well and grows in value, the value of your share what increases, right? So, the value of a share is going to increase. Some companies, pay dividends to shareholders, which is a portion of their profit, a portion of their profit. Um, Stocks are traded in public exchanges, and their prices fluctuate based on supply and demand, company performance, economic news, and investor sentiment. All these factors can sort of impact on the performance of a stock that is out there, right? Um, the question is, why do companies sell stocks? Why do companies, sell stocks? So companies sell stocks to raise largely, capital, right? Companies sell stocks to raise capital for expansion, for they raise they want to sell stocks for product development, right? They want to get into a niche area, product whatever, and then they float stocks out there. People can buy. So as people are buying, they raising capital, they getting money for product development. Sometimes too for paying off debt, right? They want to pay off their debt as well, or entering into new market, right? Maybe they want to go to a new territory, a new region, and whatnot, right? Sometimes they can raise money, for that purpose. So instead of taking loans, right? So instead of companies, taking loans, which need to be repaid with interest, they rather what selling of stocks, allows them to obtain the funds that by giving investors a share in the business, right? So typically of the companies, instead of them going to borrow, right? They don't have to borrow, and then they have mountains of interest, to pay back. Instead of them doing that, They rather sell a piece of the company in the area, or in terms of what stocks, right? In stocks, so that they can get the money that they need to do whatever they want, right? And then the people that pay for the stocks, they also get to be part owners of their company as well. This one, they don't have to repay anybody any loan interest, and so on and so forth, right? This process benefits both parties. You know, the company gets a fund if it needs to grow. And the investor gets a chance to profit from the company's future success as well, right? So as they do this, as this is done, um, when a company gets a fund, they grow, and investors also get a chance in what the profitability of the company performance in the future, right? So take note of that. So when companies, they want to be able to sell stocks, right? Very foundational set level, right? When companies have to sell stocks, they do what we call an IPO, right? We're learning over here. This journey is learning, right? Coming in with a growth mindset. You do what we call the IPO. What is an IPO? An IPO is what we call the initial public offer, or public offering, right? So basically, an IPO is when a private company offers its shares to the public for the first time on the stock exchange, right? So for the first time on the exchange, yeah, they want to go public, and then they offer their shares to the public so that people can buy. So it is a company's first step in becoming, publicly traded company. So there was once upon a time, Facebook was not, on the market, on the public traded, exchange. Today they are traded, Facebook, has shares, and their share price keep going up. People are making money. But before an IPO, the company is privately owned by what? The founders, venture capitalists, and early investors. And after the IPO, it becomes a public, traded, company, allowing anyone, the general public, to be able to participate in their ownership by what? By buying its stocks, right? So companies go public to raise, significant capital. Companies go public to enhance credibility and market visibility as well. So there are so many reasons why companies go where public, right? To provide liquidity to early investors, etc. Example, Facebook went public, as you guys have seen. Facebook went public in 2012, 2012, through an IPO, initial public offering, allowing the general public to invest in the company. Your bet or your guess is as good as mine. 2012, the share price for Facebook stock, and today the share price, right? Matter of fact, let me check this out. Like, was how much was Facebook first IPO? Um, okay. So I just check over here. Facebook's IPO price was $38 per share, right? So their first IPO was what? $38. I just checked right now, in 2012, in May 18th, 2012. Today, what is Facebook current? Um, trying to see if I can see Facebook. Let me go over here. Um, oh, I've forgotten that you're not called Facebook. You're called Meta. uh, um, so I just checked right now, right? Facebook's initial IPO. The initial IPO, the initial IPO was what? $38. Can you imagine? $38. Today, do you guys know how much their stock price is? Let me show you guys here. You know, um, $38 today. This is the current price. I just checked right now online, from the chat, right? Yeah, I hope you guys can see. Let me see in the comment section if you guys can see my screen, the chat right now. The current price for Facebook right now is $710. Can you guys see? Let me see in the comment section. Yes, yes, guys, this class is an interactive class, right? This class is an interactive class. It's not you stay on mute and silent. That's how I'm gonna know you are participating. You are here, right? So can you guys see my screen? So today, let me put a check mark over here, a line over here. This is the current price for Facebook, right? The initial IPO in 2012. Let me increase this over here. This is the current price right now, right? $710. That is a current price right now for Meta. That is, Facebook, right? As a parent company, Facebook. This is how much it is right now. So you can imagine if you bought, at 2012, you bought maybe 100 shares of Facebook at $38. Today it's $710, right? $710. So that is how it works. That is how it works. All right, back to business. So they went public 2012, through an IPO because they needed to raise money, as I've mentioned, for capital for expansion, for product development, market visibility, credibility. There's so many reasons why organizations and companies go public, right? So many reasons why they go public, right? So Facebook went, public around this time, and today they are a major force when it comes to the market. Um, okay, all right, let's move on. So we will start our journey also with our own company, right? I'm going to start our own journey with a company, and then we will move to the chat, right? That is how we're going to immerse ourselves in this process. I love it, right? We're going to immerse ourselves in this process, and we're going to get our hands dirty as well. So, um, I'm going to give an example over here of Michaela and her make money, right? Make money juice, right? Um, from lemonade stand to an IPO. As you guys can see the picture over there, that's Michaela standing over there with her jar of lemon juice, right? And then she started from here and all the way to an IPO, right? So guys, this morning meet Michaela, right? She starts a small business called Make Money, right? That's her lemonade juice, right? It's called Make Money, a lemonade stand that becomes very popular in her neighborhood because of a secret, lemonade recipe and a warm customer service, right? So Michaela and her make money example. So stage one here is about what we call growing their business. So Michaela begins by using her own savings to run the stand, right? So, and as business grows, she starts selling the lemonade in different neighborhoods and even at a local store. So here is a little girl, 8 years old, or you can say 10 years old, and every year at her birthday, the parents, the mom, and then the father, the dad, and uncles and aunties and other relatives, they come around and then give her some money for her birthday and other occasions like that, Christmas and other festive occasion. And she was able to save, she has been able to save. She saved her money, and then one day she went to Walmart, right, store, and then bought some lemons, right, brought it home. The mom already got a blender at home, right, so she doesn't really have to invest in all those equipment for now. So she blends and extract the juice and everything from it, and then she has started, on a tabletop, right? So she started on the tabletop right in front of their home, right? So you guys saw her in this picture over here, right in front of their home. She's selling the lemonade juice, right? The make money juice, right in front of their home, right? And then start selling it. And now it has become so popular, right? The juice has become so popular now, such that she's now selling in different neighborhoods, right? Maybe two or three more neighborhoods in addition to, right, the one that the table stand in front of their home, right? And then we go to stage two of this process, how she will now go to become a public traded company, right? Now she's doing well, but she's seeking more capital, right? She's seeking what? More capital, more money. And she wants more money, right? She wants to expand into bottled lemonade. Doing it from the cup, pouring from the jar. It's okay, but it's not the best. So now what does she want to do? She now wants to maybe, upgrade a little bit, by doing what? By now start bottling the lemonade juice and not just sell it in front of their home, but now start putting it out in local supermarket, right? Local supermarket, and start delivering a delivery app. So this is why the stage two, seeking more capital, she's going to use the money for, right? So her savings aren't enough for this expansion, so she considers raising capital by selling part of her business to investors. So she's going to go out to start talking to her dad, her mom, try to persuade, talk her mom and her dad into this. Hey, dad, can you give me $10,000? Can you give me maybe $1,000 or not too much, maybe $2,000? I want to start, doing this. Maybe $5,000. Pick up a call. Say, mom, can I talk to my uncle? Mom gives her the phone. Talk to uncle, family, friends, etc., and try to make it out 10 years, 12 years. It's convincing, family and friends and relatives, that hey, I want you guys to believe in my vision, right? I'm going somewhere, and I want you guys to go with me. You know, she's selling the vision to them. Say, hey, uncle, hey, auntie, this is what I'm trying to do, and in return, I want to give you guys 10% of the ownership of this business, right? 10% ownership of this business. So she convenes, family and friends, and other angel investors who believe in what she's doing, neighborhood people who believe in what she's doing. And now we're going to stage four, right? We are now ready and excited that we're moving on to stage four. Stage four is what? Preparing for IPO, right? So after a few years, 3, 4 years, 5 years, wow, the lemonade juice that she borrowed money from, little money from, $2,000, $5,000, and $1,000 from few family friends, and started bottling and started selling in the local Walmart and local supermarket and other corner stores. Now, she even want to go big, right? She wants to now go big and even take it to different states, different cities, right? She doesn't even want to sell only in maybe Atlanta, Georgia. She doesn't want to sell in the local, city, maybe New York, but she want to take it to Chicago, take it to other cities around in America, take it to other cities, wherever you are, right? So Make Money has grown massively with product in major stores and thousands of customers, right? They love the juice, right? Now Michaela wants to raise millions of dollars. Now she doesn't want to just raise 1,000, 1,500 and $500 from family and friends, but now she wants to raise millions of dollars to take the brand nationwide, right? To at a national level. So she's going through what? A public, what we call the IPO, initial public offering, right? Wow, that is exciting. So look at that from tabletop in front of their home all the way to the Wall Street, right? All the way to the Wall Street. So going public, she works with a financial advisory firm. When you want to go public, right? You don't do it by yourself, right? You need a financial advisory firm and underwriters to determine the value of your business, right? So the good news is that while she was selling at tabletop, while she started selling also at the local supermarket and other corner stores, she had a records of whatever that was coming in, the sales and everything coming in, right? So she worked with financial advisory firms, and then now they make a determination of the value of Make Money, right? So now they've decided that Make Money is worth $10 million. Can you imagine something from tabletop now worth $10 million, right? And then what did they do? They'll release by the worth of 10 million, they'll release 1 million shares at $10 each, right? So now every Mary and Joe and the public, they can now buy Make Money shares, if it goes to if the IPO happens, right? So it's now worth $10 million. They release 1 million shares at $10 each, right? So when the IPO happens, the public can now buy those shares on the stock exchange. All right. So stage six, guys, we are moving on, right? We are moving on with speed this morning. So stage six here is that they have new shareholders are joining. People are buying. Thousands of everyday investors now own, a piece of make money because they saw the IPO, they saw what has happened, they saw the everything looks good, and now they are all buying stocks of make money, right? Michaela still owns a large portion and now has access to massive capital as well because she has raised money, right? And a lot of investors are coming in buying the stocks, shares of make money, and she's now able to scale. She's not able to scale that business, right? She's raised massive capital, guys, massive money, and now she's what scaling up. She's scaling up her business. All right. Now, as she's scaling up, going national or nationwide, national level, going to other territories and other, jurisdictions, etc. Now, what's going to happen? There's something called dividends and profit, right? As their sales is going, is booming, everything is looking good, they're making money. Guess what's going to happen? She's going to declare profit. She's going to work out her books, her accounting books, right? The accounting books is going to be clean, right? We'll keep it clean, right? Dividends and profit. So as Make Money continues to grow and become more profitable, it start paying dividends to shareholders, right? So I bought some of the shares of Make Money, and at the end of the year, she declares, profit and then dividends, and then I get even paid for profit, right? This is exciting news. This is good. So those who bought the shares early see their investment grow as the stock price rises. So as they make more money, and the performance is looking good, so is their dividends, so is their profit also, right? It's also going to increase. That is what we are talking about here, right? So what's the lesson here? Just like Michaela, the real companies that we see on the financial market, they all started just like that, right? That is the lesson I'm trying to cut across or bring home. I'm trying to drive home here. So all the companies that we see, and we're going to go through some of them from the chat, right? I'm going to switch screens right now, right? They all started just like that. Can you guys imagine? Just like that. The companies that we trade, Tesla, Apple, Coca-Cola, all the companies, they all started in the same process. The same process. They started from that point, move on to the next, move on to the next stage, different stages, and today they are publicly traded companies. Publicly traded, publicly traded companies right now, right? And investors benefit by buying into great companies and potentially growing their wealth over time, right? So same thing. So all these companies here, let me switch screen here. So all these companies, as you guys will see them over here, you know, all these companies here, I've added some few companies list over here, you know. Hopefully you guys can see my screen. Can you guys see my screen? Can you guys see my screen? You know, I want to see a yes. I told you this class is an interactive class, right? Can you guys see my screen? I want to see a yes in the chat. This class is not a dull class, guys. It's not a dull, it's not a sleeping class, you know? Yeah. So when I say, can you guys see this? I want you guys to put in something so that I know that you guys are still with me. I didn't put anybody to sleep, right? I didn't put you guys to sleep. I know it's early morning, but all right. So here is what GE, General Electric Aerospace. I'm going to use a mouse pointer here, and I want you guys to follow along, right? GE, right? I'm sure they started when they started over, when they went IPO, that now we are able to trade this company, we're able to trade their stocks, trade, whatever. They also started the same thing, just like Make Money, right? Make Money, the lemonade juice example I just gave you guys, right? Like just like Make Money. Today, their share price, right? GE Aerospace, can you guys see over here? Their share price is what? It's what is highlighted in red over here on this scale side, $297. But I'm sure when they started, the stock price was something very small, right? Today is what, 200 and what, $97, right? That is what GE, aerospace. And then the exchange that they trade on is the NYSE. So GE Aerospace is traded on the New York Stock Exchange, right? The exchange will also be indicated over here. When it comes to the chart, it will be indicated over here, right? The NYSE, right? GE Aerospace today, 200 and what, $97. Can you guys imagine? All right, let's go to the next company over here. So just like we did for the GE, look at it. Procter and Gamble. So Procter and Gamble, big company. That's where we get all these, soaps and toiletries and other things. All these consumable products. They are into that. Procter and Gamble. What is their stock price right now? Right, it's $150, $152.24. Right, $152.24. But guess what? It started right at a corner somewhere, in some home somewhere. And today they are traded also on a big exchange, just like the New York Stock Exchange, the NYSE, Procter and Gamble, right? $152.24, right? So there's so many companies I've listed over here. I've added to my watch list over here. This is Honeywell International, right? This is Honeywell International company. Today their stock price is what? They're also trading. It's also a public traded company, and they also at what, 209, 209 and 4 cents, right? 209, right? They went all the way up to about 240. As a matter of fact, their stock price went over 241, and I think it's people are trading and etc. It's that's how it is. It goes up, comes down, it goes up, and today the current share price or stock price is $209.04, right? As you guys can see, $209.04. So that is Procter and Gamble. How about this one? How about T-Mobile? You can see T-Mobile over here. T-Mobile, US Inc. Right? US Incorporated. T-Mobile is also here. What is the stock price? What is the stock price for T-Mobile? It's $230 right now, right? As it's being traded. It is now a public traded company. T-Mobile may also started somewhere, small company, right? I'm not sure when they started, or when at the beginning of the IPO, they didn't start with $230. No, that was not what it started with, right? All right, let's go to the next one over here. So Lowe's companies, right? And I forgot to mention the exchange that they also traded on. T-Mobile is what, traded on what? Can you guys see the exchange? NASDAQ, right? On the NASDAQ exchange, right? That is where the exchange that they trade the T-Mobile on, right? How about Lowe's, right? Lowe's is also traded on the NYSE, Lowe's Companies Incorporated Inc., right? $246, guys. $246. $246. That is what the share price, $246, right? That also get traded also on what? The NYSE, the New York Stock Exchange, right? The New York Stock Exchange. The New York Stock Exchange, that's for the lows, right? How about Union Pacific Corporation? Union Pacific Corporation, UNP, that is their ticker symbol. Union Pacific Corporation. That is also on the NYSE, right? New York Stock Exchange as well. That is the exchange that it gets traded on. Today, what's their current price? Stock price is $236.79. 200 and what? $36.79. Just like the make money example we just looked at, right? From tabletop, selling lemonade juice, went all the way to local supermarket, went all the way to raising funds a little bit from family and friends, went all the way to, getting advisory firms, and now going for IPO and becoming big. That is the same thing like all the tradable asset that we're going to be trading. That is how they all started. Their journey is not different, right? That is what I'm trying to communicate. Their journey is not different from make money example that we just looked at, right? So all these companies that we see, CrowdStrike is a security company, cybersecurity company. Same thing. Look at their current price, $489.84, right? Let's say even $490, right? Right. That's their current price today, right? But guess what? They started somewhere that there was not $489, right? And they raised funds, they expanded, got into new product segments, etc. And today, this is where they are, right? Goes all the way. How about DAL? DAL ticker symbol is what? Delta Airlines, right? Delta Airlines, what is their stock price? $57.27. $57.27, right? That's Delta Airlines, right? ALK, that's Alaska Air Group Inc. They also trade on the NYSE exchange, the New York Stock Exchange, right? What's the current price? $49 and what? 18 cents. So it goes on and on. That is what I'm trying to communicate here, right? So Monster Beverage, Corporation, they also traded on the NASDAQ, right? Exchange, the NASDAQ exchange. As you guys can see, NASDAQ exchange. What is the current price? $67 and what? 16 cents. 67.16, right? That's the current price over here. But guess what? They also started from somewhere, right? They also started somewhere exactly same like the make money example we looked at, right? The make money example that we looked at, right? They also started same way, right? Same in the same similitude, right? KO. KO is what? Coca-Cola, right? What is can you guys see the screen? What is the value of their stock price today, right? $66.65 right now as the market closed yesterday, right? The market is closed now, today. But yesterday, at the time of closing, it was what? 66.65, right? 66.65. How about Walmart, right? We all love Walmart. We shop from Walmart all the time. How about Walmart, right? $102 and what? 7 cents, right? So a lot of all these companies over here, right? All these companies, NVDA Corporation, traded on the Nasdaq, $187. That is the current price, over here, as it's been traded. 187, that's the current price, right? 3mm, right? What is the price right now? $158.66. Apple, right? Everybody knows Apple, right? $258. That is what the stock price for Apple. $258.02. $258.02, right? How about FDX, FedEx, right? FedEx, corporation, right? $244. That's the current price, right? At the time of closing yesterday, right? And then Dow Inc., CVS, a pharmaceutical health corporation, CVS, $77, right? So Amazon, right? Amazon, how about Amazon? How about Amazon? Amazon over here, $219. $219 and what? 51 cents, right? 21951. 21951, right? That is a current what? That's a current price. That is the current price for Amazon, right? Amazon. But that is the same story, their journey, their success, and whatever they have today. It's not different from what the make money use example, right? A classic example that we just did a quick walkthrough, right? We just walked through that journey, right? All these companies right here, PYPL is what? PayPal, right? PayPal Holdings Inc. Traded on the NASDAQ exchange. As you guys can see, the NASDAQ exchange over here, right? Yesterday, at the time of the market closing, 69.25, right? $69.25. That's when the market closed for them, 69.25. But PayPal experience and how PayPal started, and it's not different from Make Money, right? And now they have become a public traded company. Amazon, same thing, right? $219. That's where they closed yesterday, right? So all these companies, right, and many more, all these companies and the ones that are not even here on my list, right? Here is what? BAC, Bank of America Corporation, right? Traded on the NYSE, the New York Stock Exchange, right? The New York Stock Exchange. Same thing. Their story is not different, right? It started with somebody, right? And now they're public traded. VZ is what? Is it Visa or Verizon? Verizon Corporation, right? Also on the NYSE. Same thing, right? CSCO, is that Cisco Systems? Yes. Charles Schwab, Corporation. So all these companies, AIG, MET, MetLife Inc., all these companies that we see over here, so many of them. Airbnb, right? How many of us have heard of Airbnb? We've heard of Airbnb. Their stock price after yesterday Friday's closing is what? $120.22, right? Airbnb, right? We all know of Airbnb today, right? They closed at 120, but it started with just some guys and, start for somewhere. Just like Make Money example, right? DoorDash. We have DoorDash over here, right? DoorDash, a delivery company. Delivery company, DoorDash. You know, UPS, Oracle, all these companies here, CVX, right? Chevron, Google, right? All these companies here, that is the exact same story, just like the um, Make Money example, right? Make Money example that we just looked at. So they all came, Netflix. We've heard about Netflix, right? Netflix, we heard about, Netflix. Um, and the current price is what? $1,153, right? That's the stock price for Netflix, right? Adobe, right? Adobe Inc. That's traded on the Nasdaq. You guys can see it indicates the exchange that is traded on as well, right? The exchange that is traded on as well. And the current price $346.74, right? UNH, right? UNH, that's United Health Group, right? $360.20, right? $360.20, all right? So all these companies, just like our Make Money example, guys, it's not different. All these companies, just like our Make Money example, it's not different, right? It's not different. So just like Michaela, real companies use the financial market, you know, to raise capital, to raise money for expansion, like I said, for new products, etc. For to expand their operations into different territories and whatnot, and share ownership with them, right? While they raise money. All right. Now let's we missed our first break, but it's fine. We'll keep going. We'll take one very soon. So now that we've taken a look at how all these companies that we trade, right? How they came to being, you know, how we found them on the exchanges, and today we wake up in the morning, we do our analysis, and if market conditions are good, they are perfect, we trade them. Let's now look at the what we call sectors, right? Because the market is not a straight line. It's not just general. It's categorized, it's grouped into sectors, right? So let's take a look at sectors now. So what is a sector over here? A sector is a broad grouping of companies that operate in the same segment of the economy, right? So sectors help investors and analysts understand how parts of the market are performing relative to each other and provide what a framework for diversification, right? Each sector contains various industries with companies offering similar goods and services. When analyzing the market, sectors, kind of provide valuable insight into economic cycles, investor sentiment, and trends as well, right? So sometimes, we kind of do a combination of some of the sectors. You look at how this, maybe this sector is moving, and then we know that, okay, this is going to have adverse impact on this other sector. So if I'm trading this, I got to be careful. I need to be careful that, because of what is happening on this side, right? So that's why we need to know this. We got to be aware of this, right? There are about 11 sectors, right? There are about 11 sectors here. the 11 sectors of the market, right? So one is information technology, right? The focus when it comes to information technology or tech sectors, the tech sector is, companies that produces hardware, software, and then IT services, right? So what are some of these companies? Apple, Microsoft, Nvidia, Intel, Cisco Systems, they are all broadly categorized into the information technology sector, right? Hopefully you guys are with me so far. Let me see a yes, yes. Guys, like I said, this class is an interactive class. It's not a sleeping class, right? So let me go ahead, let me see a yes, yes to let me know that you guys are still with me so far. Go ahead and put a yes in. It's an interactive class. It's a participatory class, right? It's not a silent class, all right? So let's do it. Okay, I see a yes, yes, yes from Gifty, for Maxi, for Roslyn, for Prince. I see for Emmanuel, for Derek. All right. Let's keep moving. Let's keep going. All right. So the market is, categorized into sectors, right? All right. So, in the IT or the tech sector, the focus on companies that manufacture or produces hardware, companies that also software, companies that are into IT services, etc. And these are examples of them, right? Apple, Microsoft, Nvidia. Some of them are into hardware, Intel, Cisco systems, etc. Right now, the role of this, stuff. They drive innovation. They respond to consumer and enterprise demand for digital tools, right? That's one thing that we need to keep, we need to keep in mind. And then we have the healthcare. We have the healthcare sector as well, right? Healthcare sector. Um, we have the healthcare, sector. The healthcare sector, just like the IT sector, we have the focus on pharmaceuticals, biotechnology, medical devices, and other services as well. What are some of these companies that play a key role? They are major players, in the healthcare sector. We have Johnson and Johnson, we have Pfizer, we have United Health, we have Merck, we have Abbott Laboratories. We have a lot of them, so many of them, right? And if you look at the healthcare sector or companies that are in the healthcare segment, defensively positioned to a sector that performs steadily regardless of the economy. Typically it doesn't matter what is happening, healthcare is always doing well, right? And so all these things give us insight. We'll be doing all this analysis, right? So when you're looking at something to trade, looking at all these companies that are no move, it doesn't matter if Trump is speaking or Trump is not speaking. It doesn't matter if Fed board chairman, the Fed but chairman is speaking or not. Jerome Powell is speaking or not. It doesn't matter who is speaking. They're still going to be doing what they'll still be thriving, right? They'll still thrive. So the healthcare sector is also another key sector within the market, right? The market that we got to be aware of. We need to know. All right, and then we have the financial sector as well. We have the financial sector. And financial sector, the focus is on banks, the focus is on investment firms, the focus is on insurance, real estate, etc., etc. Right? And so, what are some of these examples of these companies that falls under banks, investment firms, insurance, real estate, etc.? J.P. Morgan Chase, example, Bank of America, Wells Fargo Bank, Goldman Sachs, Citigroup, etc. So many of them, they are all under the financial sector, right? They are key to capital flow, monetary policy, sensitive interest rate changes, etc. So when you look at some of these companies, if you are trading them, if there's there's going to be a change in interest rate, etc., you got to be aware that it might impact on your trade, right? If you are trading some of these stocks or some of these companies, you got to be aware of this, right? So we are the financials. That is the financial. All right. Now, let's go to the consumer discretionary, right? The consumer market, consumer discretionary, right? Um, when you look at the consumer discretionary, we're talking about non-essential goods and services like cars, luxury items, and retail, right? So non-essential goods and services like cars, luxury items and retail, they all come under consumer discretionary, right, sector. So what are some examples of some of these companies that are in there? So we're talking about Amazon, we're talking about Tesla, we're talking about Nike, we're talking about Starbucks, we're talking about Home Depot. All these companies are all a classic or typical example of companies that fall in the consumer discretionary right sector. All right. Um, they performs well during economic growth tied to consumer confidence. So typically, if we have any news and anything coming on maybe consumer confidence is up, that means some of these sectors, some of these tradable assets, etc. There's going to be a push up, a rally in some of this market. Something to note of, right? Something to note of. All right, and then we have consumer staples as well, right? Consumer staples as well. So consumer staples is another area or another sector. So we have essential products such as food, beverages, and household goods, right? What companies are we talking about here? What companies are we talking about here that are in the consumer staples sector of the market, right? We're talking about Procter and Gamble, Coca-Cola, Walmart, PepsiCo, right? Colgate, Palmolive, and all these companies, they are all within what we call the consumer staples, right? It's a very defensive sector, usually stable in any market condition, right? It doesn't matter. Every day people are drinking Coke, right? People are buying toothpaste, right? People are going to Walmart to shop for groceries. People go, babies gotta eat, right? So it doesn't matter. It doesn't matter, the market condition. Um, some of these companies will thrive. Some of these companies are going to do well, and that regardless of whatever that's happening, right? So something that we got to be aware of, right? Something that we got to be aware of. And then we have the energy sector, right? We have the energy sector as well. We have the energy sector. So energy sector, the focus is on oil, it's on gas, it's on renewable energy, etc., etc. Solar, etc., wind, turbine, and all of that things that you guys already know, right? So the energy sector, we talk about companies like Exxon Mobil, Chevron, ConocoPhillips, Schlumberger, Nestra Energy, and so many others. Shell, there's all these companies, they're all in the energy sector, right? Very another stable industry. Influences inflation and global trade tied to commodity, prices. That's what the energy sector is about, right? The energy sector over here. So companies have listed some few companies over here, some icons over here. Shell, Duke Energy, etc. They're all in there, right? They're all in there. Exelon, Eneco, Elia, yeah, they're all in there, all right? In the energy sector. And then we have the industrials as well, right? We have the industrials as well. We have the industrials. We have the industrials as well. We have the industrials. In the industrials, we talk about, the focus on manufacturing, the focus on construction, the focus on aerospace, focus on logistics, right? That is what they focus on when we talk about the industrials. It's on manufacturing, it's on construction, it's on aerospace, it's on logistics as well. What companies are in there? Boeing, right? The airline, it's not an airline, it's an airplane, manufacturing, right? So Boeing, General Electric, Caterpillar, Union Pacific, 3M, they are all in what we call the industrial, right? Industrial sector, right? See, they are also very sensitive to economic cycle, vital for infrastructure development, right? So that is industrial as well, right? Industrial. And then we also have utilities, right? We also have the utilities as well. We have the utilities as well. All right. So utilities, we have, electricity, we have gas, we have water services, etc. They're also in there as part of the market, right? So companies like Duke Energy, Dominion Energy, American Electric Power, Southern Company, defensive sector. It's a very defensive sector as well. Stable revenues from essential services. Hey, it doesn't matter. Your light got to be on, right? You got to have power. We have power. We need power at home, right? So these are also very stable sectors of the market as well. So electricity, gas, water, etc. You know, and all the things that you guys know. And then we have materials. We have materials as well. So materials as well with a focus on raw materials, chemicals, metals, and mining, right? So companies like Dow Inc., Newmont Corporation, Freeport, McMoran, International Paper, Lindy, and so many others, right? They are all in there. They are all in this sector. Their role tied to industrial demand and global construction cycle, right? That is what we need to know. We got to be aware of, right? And then we have real estate. We have real estate. We have real estate, guys. We have real estate, another big one, right? So real estate, the focus on real estate investment trust, REITs, right, and property management or property development. Companies like American Tower, AMT, Prologis, Simon Property Group, SPG, Equity Residential, Public Storage, you know, so many others that are also big players in the real estate sector as well, right? And then finally, we have the communication services as well as the last sector, right? We have the communication services as the last sector here. So here, the focus on what? Media, entertainment, and telecommunication. Media, entertainment, and telecommunications. We have companies like Alphabet, that's Google, Meta, Facebook, Netflix, Verizon, AT&T. They are all within what? The communication sector, community services sector, right, within the market, right? So they support global connectivities and content consumption trends, etc. They kind of control, you know, that, right? They kind of control that. All right, guys, that is the, you know, that is the. So that's the end of the 11 sectors that we want to talk about. We will go for a quick 5 minutes break, right? So let's take a quick 5 minute, go get some water, stand up, you know, stretch a little bit, and then you know we'll power on. So I'm gonna pause the record. Okay, all right. Let's get down to business. Okay, all right. So we're just talking about the sectors over here. We're talking about the sectors. We just finished up with the sectors, which is good. All right, let's get down to business. So, you know, when we want to trade, we typically want to know what we call, especially when we want to trade stocks. You know, it's not everything that you know you want to trade, right? You got to know what you want to trade. So there are types of stocks, and by their market capitalization, you know, we have mega stocks, large stock, mid cap, you know, small, micro, nano. When we say that, you know, this company is a mega stock, you know, then that means their market capitalization is about over $300 billion, right? Over $300 billion with a B, right? With a big B, you know, that is their market capitalization, you know, capitalization for that. When we say that this company is a large, right, large company, that means their market capitalization is over what, $10 billion, right? $10 billion. If we say that this is a mid cap, right, a mid, that means they are between $2 billion to $10 billion as well. When we say this company is a small, right, small, we're talking about somewhere between $300 million to $2 billion, right? When we say micro, what we mean is about $50 to $300 million, and then we say nano, something below $15 million. And so, you know, we got to be aware of, you know, okay, all right, or this company, okay, or this stock, this is between here, you know, that and that typically will, um, you know, come down also to the price of the stock itself as well, because some stocks are very expensive, right? And you know, depending on your trade purpose and style and other things that we'll be looking at very soon in the future, you know, that will determine, you know, where, you know, what you want to trade, right? Okay, let's look at how the sectors tied into the market structure, you know, our market structure. So each sector responds differently to the economic condition, interest rate, inflation, and global events. So I talk about communication services, I talk about energy, I talk about materials, I talk about what are some of the sectors again. So all the sectors that I mentioned, they all respond differently to economic conditions, right? Interest rate, inflation, the global events. So by observing which sector are performing well, investors, and that is us, they're talking about us over here, right? Investors can predict market trends, right? We're able to know, okay, all right, if this sector is doing this, if that area is doing this, then maybe, this is the kind of area that, we might possibly maybe look at, or we might possibly maybe want to focus on. Sector rotation is a strategy where traders move investment across sectors based on the economic cycle, right? There is such a thing called sector what rotation, right? And then we have the indexes. The indexes is like the S&P 500 are made up of companies from various sectors, right? Help investors gain diversified view of overall market as well. And understanding the sectors allows traders to capitalize on growth in specific industries and reduce risk by spreading investment as well. Now let's talk about market capitalization. When we say market, you guys hear me say market capitalization. What is it? We say market capitalization. Basically, we're talking about the total value of a company's outstanding shares, right? It's calculated on multiplying the stock price by the number of outstanding shares. So, for example, here, as an example, right, XYZ company, right, has 10 million shares, and each share is worth what, $20 a piece, right? Then that means that its market share is what, the 10 million multiplied by the $20, by per share. So what, the market capitalization is going to be what, $200 million. This will make XYZ like a small cap company, right? Between what, $200 million? Yeah, that's what it is. A small cap, 30 million to 2 billion, mid cap, 2 billion to 10 billion, right? And then large, 10 billion over, right? So this will make XYZ company fall somewhere, in there. So that's what we call market capitalization. So look at every company, right? You go to Yahoo Finance, you go to all these sites, you go to other places, you look at, how many shares this company, right? This company has about maybe, um, you know, maybe 20 million shares, 100 million shares and whatnot. But what is the share price, right? And then you do that, you multiply that, and then you're able to, ascertain, or you're able to get to a point we can know, okay, all right, the market capitalization of this company is at this price, right? Okay, all right, moving on. All right, moving on, guys. Let's talk about supply and let's talk about demand. All right, let's talk about supply. Let's talk about demand here. Stock prices are driven by the balance between buyers, that is demand, and sellers. When you come to the chart, like I show you guys, everything that is happening here is all about demand and supply, demand and supply, demand and supply between buyers and sellers. Everything that's happening, as I talked about, the make money journey to becoming an IPO, and then becoming like a public traded company, and all the examples that I show you guys of all the companies as well that are on the public traded exchanges as well. Same thing, but the thing that you see on the chart is all what, demand and supply. The chart, let me bring the chart here for a second. Let me bring it on the screen. All right, let's bring it over here. Okay, let me know if you guys able to see my screen. Let me see it. Yes, yes, yes. That you guys can see the chat. Can you guys see the chat? Can you guys see the chat? All this red, green, all this red, green. Guys, be fast for me. I want you guys to respond. Can you guys see all this red, green, red, green, red, green candles, etc.? Right? All right. So I see a yes, yes for some of you. All right. So basically, when you look at this, right, when you look at all this green, red, and all this chart, and all these things, it is simply an indication that there are buyers and there are sellers, right? The red here simply means what, selling, and then the green here means people are also what, buying, right? All this movement here is not anything crazy. It is not anything complex. There are no hidden mysteries over here, but it's just a representation of what, buying and selling, buying and selling. Everything that you see over here, right? Everything that you see over here, all these green candles and red candles and all of that, they are just a representation of buyers stepping into the market. And then when you see something drop with red, that means sellers has also stepped into the market, right? They are selling that shares, right? That company's, share, So as you can see over here, a big what? Explosive, red candle. That means sellers are stepping into this market. And I know the reason why, because I know that Netflix is in the news for the past couple of days because of some crazy transgender content or whatever. So I can see what is happening is beginning to drop because people are selling all this because of all these nonsense things about some content that they have. That's going on. All right, but what I wanted to communicate over here is that you know everything that you see over here, whether the price goes up, when the price was here, how much was it? If you when I bring the mouse point over here, let me bring a line here up here. When I bring a line here, the price was here. The stock price was at what $1,266.89, and then when I come over here to today, where the market closed yesterday, right, is 1,153. So here, basically, the price moving up or coming down, it doesn't matter, right? Price action, whether going up or coming down, it doesn't matter. But it is all driven by what? Buyers and sellers. That is a message I'm trying to communicate here, right? All that I see here is there are buyers. Sellers are stepping into the market. Buyers are stepping into the market, right? Basically, that's exactly what is happening, right? So the market is driven by what? Buyers and sellers. Buyers and sellers. All right, let's come back to what our topic, what we're doing here. Okay, all right. So stock prices are driven by what? The balance between what? Buyers, steppers. So when sellers, there are more sellers than buyers, then you guys will see that the chart will now begin to show explosive red. That means there are more sellers than what? Buyers, right? And when there are what? More buyers than what? Sellers, you guys will see an explosive rally, explosive green candle as well. That means what? There were a lot of what? Buyers as well, right? Than sellers, right? That means what? The buyers, they are what? They've overwhelmed. They are overwhelming the sellers, right? They're taking over, right? The buyers are stepping in boldly, right? And we don't have enough competition from the sellers as well. That's all that you see. When you look at the chart, when you look at all these candles, that is, they are a representation of the balance between buyers and sellers. Essentially, demand and supply. Let me see a yes if you guys are able to see the slide back again, because I changed screen again. Let me see that you guys are on the slide. You guys are able to see the slide. Let me see a yes, 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 guys. This is an interactive class, right? So let me see a yes. Put in a yes for me. Let me know you are here. You're not sleeping. I didn't put you to sleep. I didn't put you to bed. You are here with me. I'm not talking to myself, right? Let's go. Let's go. Let's go. Let's go. All right. Okay. All right. So demand and supply. Demand and supply. So anytime you look at the chart, anytime you see something, that is what you got to be looking at, right? That's what we are looking at here. If everyone wants to buy, Tesla shares because of maybe a fancy new product, a fancy new technology that they come to the market with, we will see a high demand, right? And fewer people want to sell. Low supply. That will result in what? Low supply. So the price goes up. When something like that happens, there's going to be a lot of what? Demand, buying going on in the market, right? Because of something new that's coming or new thing that Tesla is releasing or whatever, that's going to result in what? A rally in the market. Demand is going to go up, right? Okay, the price goes up. If bad news hits as well, it goes the other way too, right? If bad news hits and many investors sell their Tesla shares, we will see a high supply. That's why you're going to see the red candles, right? The red candles represent their indication of what? Selling, right? Supply, right? Selling in the market, right? So high supply, but few wants to buy. That's low demand, right? Then the price drops. So guys, when you're looking at it, right, that's demand, that is supply, that is buying, that is selling, buying and selling, buying and selling all the time. Anytime you look at, the market, if you look at, the market, it's all buying and selling, buying and selling. You look at the chart, it's all buying and selling. So it's not a mystery. When you have never traded before, when you have never, touched anything before, when you see all these things, you're like, wow, what's all these things about? You look at the chart, you are confused, but they are nothing, guys. They are nothing but what? Just a representation of buyers and then what? Sellers. A representation of what? Demand and then what? Supply. Demand and supply. All right, let's move on. Moving on, guys. So we have something we call bulls and bear market, right? We have something we call bulls and bear market. Bear market and then bulls market. A bull is almost when you look at, if you have seen a picture of the New York Stock Exchange, I've been there before, a long time ago. I've been there before, and I've taken a picture around, the New York Stock Exchange, and you see this bull, like, they have these two wild animals, presented by the bulls and bear, right? Essentially, when the bull wants to attack, right, the idea here is that when the bull wants to attack, they lift up their horns up, they attack, whilst pointing up, right? And then the bear, right, the bear, when they also want to attack, they also point down, right? They attack downwards, right, pointing downwards. So that is the explanation here. So bulls market, bears market, all right? But what is a bulls market? Prices are rising or expected to rise. When we say we're in a bulls market or it's a bull market or whatever, that means prices are rising or they are expected to what? To rise. Or high investor confidence, right? That means we are in a bulls market. When you hear a bear market or a bears market, that means prices are dropping, right? They are dropping like a stone, right? Prices are falling or they are expected to fall. That's why we say what a bears market, right? When you hear a bears market, that is what that means, right? When that happens, investors are cautious and they are selling off, right? Investors are cautious, they are selling off. From 2009 to early 2020, the US market was in a bull market, right? All the way from 2009 coming all the way to 2020 before the pandemic, right? COVID-19. Before COVID-19, the US market, guys, it was in the bulls market. That means it's in all-time highs. It's always rallying. It's always going up, right? Until the pandemic, hit. And then it briefly turned into what? A bearish market. When the pandemic hit, the world was in chaos, everybody don't know what was happening. People were dying in their numbers. um, it was a crazy thing, right? Crazy. There's a lot of craziness going on around that time, 2020, and of course, when that happens, people are in panic mode, and people are selling. They are selling a lot of things. They are selling even their investment positions and different things like that. So the market tends to go in a bearish market. That's what a bearish market means. What prices are falling or they're expected to fall. Investors are cautious or they are selling off as well, right? So that is what a bearish market. That's a bearish market. All right, moving on. There's something we call volatility, right? Something we call volatility. And what is volatility really, right? I told you guys, as part of housekeeping notes, guys, be writing notes. You need to have a notebook, you need to have a pen, paper, be taking notes, whatever. Hey, whatever that you can do to take some notes, you gotta do it, right? It's that responsibility is on you. All right, volatility. So volatility here, the degree of variation in stocks price over time. So high volatility means that high movement, whether it's downwards or upwards, right? Volatility essentially means what the movement, right? The degree of movement of the stock price over time, right? That's what we say. Whether it's going up, whether it's coming down, is what there's volatility, right? Um, a stable stock like Coca-Cola, right, moves very slow, so low volatility, right? A tech company or a tech startup or a cryptocurrency might rise 20% a day and drop 50% the next. That's what high volatility. If you're trading something like Tesla, right, guys, if you're trading something like Tesla stocks, right, that's a high volatility product, right? It can move a high percentage within a day and drops as well. right? That is high volatility, you know. So volatile assets can offer more opportunity, but also carry what? High risks. All right. It's the same every time and anywhere. You know, high risk, high reward. Low risk, low reward. That's what it is, right? It is it correlates, just like that. You know. So volatile assets can offer more opportunity, but also carry what? Higher risks, right? Something that you guys got to be aware. You got to be aware of it. Keep it in mind. All right. Let's move on. Liquidity. We call something liquidity. As we're studying this market, because of liquidity. What is liquidity here? So essentially, liquidity is how easily you can buy, sell an asset without affecting its price, right? How easily you can buy or sell, an asset without affecting the price. We'll also look at liquidity in a different way when we move in an advanced, sessions, and we're actually trading. We'll talk about liquidity in different. But today, this time around, this is what we are looking at. I say liquidity. So liquidity here, example is Apple stock. So Apple stock is highly liquid. You can buy, sell it instantly at nearly the same price, right? There's liquidity in there. A rare painting or small company stock might take time to sell and it may sell for less or low liquidity, right? That's what low liquidity in there. So how easily you can buy, sell an asset without affecting its price, in there. So that's liquidity. All right, dividends, right? We talk about make money Jews, right? Our classic example this morning. Classic example. Make money Jews. How she grew that business right from tabletop in front of the house all the way to an IPO level, and it didn't end there. Paying of dividends, profit, sharing of profit with their investors, right? So dividends, portion of a company's profit paid to shareholders, usually quarterly, right? I've some companies like that. If Coca-Cola pays $1.50 per share in an annual dividends and you own 100 shares, that means what? You get to have what? $150 per year. This is a passive income on top of any gains from rising share prices, right? So some companies they pay dividends, some companies too, they do different things with their profit sharing. All right. As you begin this journey to become a professional trader, there's something we call earnings report, right? If earnings report is coming out for some companies, you got to be aware of it, right? You cannot say that, I don't know, I'm just trading. No, you got to be aware. If some companies, their earnings report is coming out, it's basically their overall, outlook, right? So you got to know if you're especially if you are holding on to a position, you are in a trade and their earnings report comes out in the evening and whatever, that can sharply drop the price, and take you out from a trade. So you got to know. But earnings report basically is companies releasing release earnings report, showing their revenue, expenses, their profit, and their outlook. This helps investors assess their performance, right? So when you take a look at any earnings report, that is how you're going to look and assess and evaluate that, oh, this company is doing well or they're not doing well, right? That is everything's going to be in their earnings report, right? If Amazon reports higher than expected profit, your guess and you bet, the stock price is going to rise the next day, right? If last night maybe there was their earnings call and then their earnings report, they reported that they are doing well, everything. Monday morning, we need to expect that the price of Amazon stocks and whatever, if you are trading, is going to go up, right? Because it's going to boost investors' confidence, right? That's what that is. It's going to boost investors' confidence. And like I said, Q1, Q2, Q3, Q4, typically quarterly, that's where, earnings report, usually comes out, right? Tesla's, earnings report, and all these other companies that are out there, they all do come out with their earnings report, from time to time. All right. Moving on. All right, moving on. Indexes. Indexes. So an index is a group of selected stock that represents the performance of a market or a sector, right? So, as you move along, we get into futures market, this market is huge, guys. I love this financial market, because there are tons of opportunities out there. You are not short of what to trade. whether the Forex, whether futures, whether stock, whether options, so many, right? So many things out there. And we'll be learning them, right? We'll be learning this market, and we'll find out, we'll dig into all these opportunities that are out there. So indexes, right? Example is the S&P 500. The S&P 500 tracks almost about 500 large US companies, right? Anytime you hear S&P 500, S&P 500, that means this is a representation of about 500 companies, right? 500 companies. That's what we call the S&P 500. S&P 500, right? 500 companies that are put together. That's why we call them the S&P 500. So I'm trying to bring a chart here, so that at least let me bring this one over here so I can show you guys what I'm talking about. All right, can you guys see this space over here? So I came over here to come and show you guys. Let me see a yes in the chat, guys. Let's do this. All right. Let me see a yes here. All right. So over here is an example over here, the S&P, right? S&P companies, S&P 500. So it goes all the way down. These are 500 companies, right? 500 companies of top performing companies, and that's why we call it the S&P 500, right? S&P 500. So you take a look at Nvidia is part of S&P 500, Microsoft, Apple, and you can take a look at their percentage that they hold, their weight in the S&P 500. So Nvidia is almost about 7.52%. That's huge, right? That means Nvidia is big when it comes to S&P 500. Microsoft, the weight of their weight in the S&P 500 is about 6.33%, right? Goes all the way. Walmart, 1.34%, right? Lilly, right? 1.24%, right? Visa, we all use Visa. We all have Visa MasterCard in our wallet, in our purses, right? If you're a man, in your wallet, if you're a lady, in your purse, we all have Visa, right? They hold about 1.12%. That's their weight in the S&P 500, right? Costco, if you shop at Costco, Home Depot, Bank of America, 0.62%. So it goes all the way, right? S&P 500. So that's what it is. And then we have the Dow Jones, right? The Dow Jones is also another one. I'll bring up the slide, but whilst I'm still here, let me run through this over here whilst I'm still on this page, and I'll come back to the slide, and then we'll talk through them as well. The Dow Jones is also, if you hear the Dow Jones, anytime you hear of Dow Jones, it's just nothing but basically 30 strong companies, right? It comprises of 30 companies, right? In another market, they call it the US 30, right? US 30, right? But Dow Jones is like a bouquet. Let me use like a basket. It's a basket of so many companies put together, right? And they call it Dow Jones companies, right? So a lot of some of these companies, is put together like in a bouquet, like in a basket, and they put together like you have oranges in the basket, right? And every orange that you have in the basket represents one of these companies. But when we say the Dow Jones, we're talking about only 30 companies, guys. That tells you this is a very strong market, right? Very strong product. There is very strong index over here. 30 companies, right? 30 companies. So all these companies, Goldman Sachs, Microsoft, Caterpillar, Home Depot, United Health, Sherwin-Williams, it goes all the way down. Johnson & Johnson, 3M Company, Chevron, Walt Disney, Mex & Co, Nike, Cisco, Verizon Corporation, 30 companies over here. Same thing with NASDAQ. NASDAQ is also, top 100 companies. In other markets, we call it the US 100, right? Let me go to NASDAQ. All right, let's go to NASDAQ. NASDAQ also comprises of 100 companies. Typically, they are all tech company, technology kind of concentrated company, right? That's what we call it, NASDAQ. NASDAQ is all tech companies, guys. Tech. So that's why the NASDAQ is very volatile. There's a lot of movement. That's why for my past students, I don't have some of my past students over here. I love it. I love NASDAQ. Why? Because there's a lot of movement in a day, right? So that's why you can make money, because we want it to move. We don't want dull and slow tortoise style type of index to trade, right? We want NASDAQ. That moves a lot, and of course, it's about tech companies. Tech is all about innovation, and so things change a lot. Big data, etc. Things are moving a lot in the tech world. That's why the Nasdaq indexes is something that I love trading. You have all these companies, right, to trade in the Nasdaq, right? Okay, all right. Let's flip back here. Let me flip back here to our screen. All right. And guys, let me know. Let me know in the comment chat that you guys can see the slide one more time. Let me know in the comment chat. Let's do this quick, 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 quick. You know, putting something there. You see, yes, yes, yes in there. Let me know that. Okay, all right. Let's move on. So we have the indexes, right? So the indexes, it's a representation, right? So selected stocks that represent performance of the market or the sector. So an example is the S&P 500, like I show you guys. An example is the Dow Jones, the Nasdaq, the Russell, right? The M2K, right? We'll be talking about all these things, right? So the Nasdaq is what? You know, the Nasdaq 100, the tech heavy index companies, right? The Dow Jones, you know, 30 blue chip US companies. The S&P 500 tracks 500 large US companies, right? And so on and so forth, right? So that's the indexes, right? You know, and when, you know, typically when these indexes rise or fall, they reflect the overall market mood. So when you begin to see something going up, coming down, and so on and so forth, Charlie, you know that the market is going to react to this. You know, you're going to see a sharp decline, sharp rise, depending on what's going on, right? So that's the indexes. That's the indexes. All right. So now that we have talked about all these beginners, some foundation stuff, now let's talk about the reason why we are here. Let's get into the meat and potatoes, right? We're now about to get into the meat and potatoes. The meat and potatoes, the heart of what we are here. What is trading? Now we get into the real stuff, right? The real stuff. All right. Let's keep going. So trading really is the buying and selling of financial instruments, right? Guys, this class, it doesn't matter your knowledge, right? If you're a beginner, whether you are, somewhere intermediate, whether this class is gonna be for you, right? So I'll pick up everybody. I'll try to explain, go down to the basics with zero knowledge, but by the end of the day, at the end of the class, the session, we make sure that you have something to take home with you. All right. So let's get into the meat and potatoes now, right? Let's get into the real stuff right now. So trading is basically buying and selling. When we talk about trading, he's a trader, the person's a day trader, whatever, right? It's just basically buying and selling of financial instruments like stocks, futures, commodities, currencies, and bonds with the goal of making profit. Guys, and this is where we're going to end it for some people, right? If you're not here to make money, then maybe you may have to skip. If you're not here, you're not here with a goal to make money, then this is not for you, right? This is not for you. We may have to go and find you something else to do, right? Maybe an ice cream shop somewhere. So you can sell an ice cream shop. You can laugh and smile at kids coming and sell them ice creams, right? Right. This is not for you. But if you're here to make profit, guys, then this is for you, right? Traders make money by capitalizing on price fluctuations within the market, right? Traders make money by capitalizing on price fluctuation within the market. Unlike long-term investment or investing, which focus on holding assets for years, trading is more about timing and timing the market, buying low, selling high, buying low in case of shorting the market. So what this essentially like captures the difference between trading and a typical an investor. And I have stocks, and there's nothing wrong with it, right? There's nothing wrong with that. If you buy stock and you're holding on to the stock, and then your game plan is that you're gonna hold on to it, and then hopefully the value of the stock will appreciate, and then you can make some money. It's good. There's nothing wrong with that, right? But with trading, we say that no. Why do you have to buy the stock? Hold it for 2 years, 3 years. I bought it for maybe when I was buying it, it was maybe $100, and maybe after 5 years, the stock price is now going to be $120, right? And then hopefully I've made some money. Or I bought it, at $100, and then after 10 years, the price is $125, right? So that means, the value of that stock has appreciated in value $25 more, right? And that is my profit. But in trading, we said, no, why do I have to sit on my hands, right? Why do I have to sit on my hands for 10 years waiting for the stock price to go $25 more before I do that? Why? Why can't I see opportunity every morning, Monday to Friday, or even Sunday night, and lock in on the opportunity that I see? Why can't I do that? So that's what trading is about. Trading is about being able to analyze the chart, do your technical analysis, do your homework. Market conditions are good, and then you are shorting the market, or you are buying or going along with the market. And guys, the market moves three ways, right? And we don't care as traders, because if you are buying a stock, your goal is that the market should go up. This is what separates, trading from, a traditional investor of somebody just buying stock and holding on to it, right? When you're a trader, you don't care about which direction the market is going to go, right? If the market is going up, you're buying it, you're going along with the market. If the market is coming down, what are you doing? You're going to short the market as it's even coming down, right? There was a day about some few months ago when Trump, declared, some tariffs, right? That day I made several money, right? I made some thousands of dollars. Right? The market, as Trump was speaking, the market was dropping, was falling. And as the market was falling, what do you think I'm going to do? I'm going to short the market, right? But if you were holding on to a stock, and then as Trump was speaking, and the market is falling, you're going to be having tantrums. you're going to be very uncomfortable because the price of that stock is falling, and you are wishing that it goes up so that you make money because you are a traditional investor, right? Okay, but trading, we don't do that. So whether the market is going up, we go up with it, right? We go along with it. When the market is coming down, we short the market all the same. Even the market is even going sideways, there's also a way to also make money even from the sideways as well. Sideways means that the market is just consolidating, right? It's just going on in a range. It's not going up, it's not coming down. It's just sitting on a range. That's sideways market, right? But trading, we don't care whichever direction the market goes, right? Whether it's going up, whether it's coming down, whether it's going sideways, we're going to make profit all the same, right? Good. All right. So that's the difference. And don't get me wrong, I bought stock. I still have some traditional stocks that they are not doing anything. They are just sitting down because I bought them way back, right? I have stocks for Tesla, I have stocks for Apple, I have stocks for my McDonald's, I have stocks for Walmart, etc. And I don't touch it. They are just sitting down there. But I even found a better way, right? I found a better way, with my money, and that's to trade. And that's daily, every day. You're going to see opportunity out there on the market, right? Okay, all right. So that's the difference, right? Selling and what buying, right? Stocks is the same stocks that the people are holding on to it. That's why we will trade it, right? The same stock that people are buying, hoping that 5 years time, 6 years time, 10 years time, they're going to make profit from it. We are not doing that, right? We are not going to hold on to it. We're not going to hold on to that. But trading, we're going to make profit off on it on daily basis, right? That is what trading is about, right? Unlike long-term investment. And there's nothing wrong, like I said. There is nothing wrong. If you're a long-term guy, traditional guy, you're just going to buy the stock and 10 years time, you go on retirement, 20 years time, go on retirement. Hopefully it has appreciated $15 more than what you bought it. Hey, go for it, right? There's nothing wrong with that. Okay, all right. Moving on. So let's talk about what makes the market moves, right? Let's talk about what makes the market move. Are you guys with me so far? Let me see a yes in the chat box. All right, let me see a yes in the chat box. Let me see a yes. You guys are with me so far. I didn't put anybody to sleep. Nobody's sleeping on me. Nobody is drooling on me. I didn't put anybody to sleep. You guys are still with me so far. All right. Okay. All right. Moving on. All right. Moving on. So what makes the market moves? I show you guys the chart, right? And you guys were seeing all the candle, the red candles, the green candles, the up and down movement, etc., etc. what makes this movement, right? What makes the market move, right? When I show you guys this, let me come here for a second. When I show you guys this, where is it? Where is it? Where is my chart? When I show you guys the chart, I think, okay, here. Okay, here. When I show you guys the chart, right, the Netflix chart, and I said, all this movement, you guys can see. Hopefully, you guys can see the chart. Can you guys see the chart? Let me see a yes for that. Quick, real quick. Let me see a yes for that. You guys can see the chart. So all this movement, all this red, green candles, all this up and down, the market is rallying up over here, like over here, guys. It's a simple example. The market is going green, rallying. That means, the market is moving up. We go up with it. If the market is going to come down like red, right? Like here from here, market is dropping, falling. We short the market all the same. If the market is going nowhere, like here, sideways, I can see a little bit of sideways over here. We can also make money from that. But all this movement, right? There is something behind it, and that's what we want to get to, right? What makes the market move? What makes the market go up? The rally, the falling, and all of that, right? What is making all this market do that? What is making the market do that, right? We need to know. All right, let's come back here, guys. Let's come back here. All right, so what makes the market moves? See, the art of trading is driven by people. The red candles that you guys are seeing, the green candle that you guys are seeing, it is not, some cartoons or some imaginary figures holding on to it. There's real human beings behind it, right? Real human beings like you and I, right? Real human beings. It's driven by people. Some who want to buy an asset and others who want to sell, right? As the red candle shows, people are shorting the market. As the green candle shows, that people are going long, they're buying, right? There's more buyers, right? People want to go long, right? So they want to sell. This constant interaction between buyers and sellers is what creates price movement, represented by what? The candlesticks on the chart, right? So as I show you guys the chart, you guys see the red candle, the green candles, the representation of the buyers, the sellers. That is what culminating into this and representing what? Candlesticks on the chart, right? The chart did not just, emerge, just appear, just manifested itself, and then we just saw red candle, green candle from out of nowhere. No, it's real people, right? Real people doing buying, doing selling, and that is what is, is being represented by what? The candlesticks, the red color, the green color, right? That's what's causing what? The movement, guys. That's what's causing the movement. So at any given moment, guys, if buyers are stronger, more aggressive than the sellers, then the price goes up. If more people are buying a certain type of, tradable asset, right? More people are buying. That means the buyers will overwhelm, right? They will overwhelm the sellers. It will cause an imbalance, and we will see an explosive rally up, right? At any point in time, if sellers, vice versa, if sellers are also, more than what? The buyers, we will see a sharp drop, right? A sharp fall, right? Red, bearish candle as well, right? That means if sellers are stronger than buyers, the price goes down. We see a lot of red movement coming down, right? And the Netflix, as an example that we were looking at, you guys saw that sharp red candle fall coming in. That means what? There are a lot more sellers than what? Buyers. That's what that represents. That means that what? There are a lot more what? Sellers. Sellers are stronger than what? Their buyers. And that's the representation of that on the chart, right? That's what that represents, on the chart. There are more buyers, there are more sellers, depending on whatever that is happening. That is what we see over there. It is nothing. There's no mystery. There's not anything for us not to understand. That's what that represents, right? So anytime you look at the chart, guys, from today, you guys are now professional traders, going to this journey, right? You begin to know, so what is happening here? Okay. All right. So this is a representation of people, and not just people. It's also a representation of buyers and sellers. and their constant interaction every day when the market opens, it is what is creating all this price action, different movement on the chart, right? We see it goes up, we see it come down, goes up, come down, right? That is what is creating that movement, and it's being represented by what? Candlesticks, right? It's being represented by candlesticks, guys. Hopefully you guys are taking note. All right, moving on, guys. Let's move on. We got some things to cover before 9 a.m. before our session ends for today, and then tomorrow we'll take off again. All right, let's keep going, guys. Let's keep going. All right, let's talk about 6 novice mistakes, right? Beginner traders, people who are just starting this journey, they make a lot of silly mistakes, and I don't want you guys to make this silly mistakes, and that's why right up front, right at the door, before you guys even get in, I'm going to start talking about some of these things. And some of the things that I'm about to share, some of them, it's not coming from some theoretical standpoint or whatever, right? I'm going to be sharing money I've lost, etc., because of such silly mistakes. And I don't want you guys to make same mistakes. I mean, I wouldn't have a name to call you. If what I did and I share with you in the training, and you also go and commit the same thing, then I don't know. Because I did it so that you will avoid it, right? I'm sharing these novice mistakes so that you don't have to do it. There's a saying that goes like, the first mouse gets the trap, but the second, third, and all the other rest of the mouse, they get the cheese, right? When we are trapping a mouse, right? We want to catch a mouse. The first mouse that comes in, boom, the trap gets it, right? The trap gets the mouse. It catches the mouse. And then, the bait that we were using to catch the mouse is the cheese. The rest of all the other mouse that comes in, they get to come and eat the cheese. But the first mouse get killed. So what does that mean? That means I am using myself as a sacrifice, right? All the mistakes or all the money that I lost in the market, right? All the mistakes, all the money I lost in the market, I don't want you guys to repeat such silly, similar mistakes. Why? I have done the mistakes, documented this, so that you guys will not do the same thing. That's what it's about. All right, let's get to it, guys. So 6 novice mistakes. 6 novice mistakes. Number 1, all right? Number 1, trading without a plan. Trading without a plan. What is the mistake here? Entering into a trade without a strategy or a clear goal. Guys, this is going to be catastrophic. It's going to be a disaster already, right? It leads to emotional decisions, right? If you don't have a strategy, if you don't have a plan, you get into a trade and there is no strategy, there's no plan, you're going to do a lot of things with emotions, right? It looks to emotional decisions. Oh, I see a green candle. Oh, I saw a red candle. And so that's why I said, I was going to sell. I was going to buy. No, we're not going to do any of that here. All right? We're not doing any of that. We're not going to do anything like that here. Because here, you guys are being trained as professional traders, right? Like a Wall Street guy, a Wall Street person. You know what to do, You're not going to do without a strategy. You say, oh, no, but I saw the red candle. No, but I saw the green. No. I'm going to tell you that. Nah, you're being foolish, right? We don't do that, right? We don't do that. We don't trade just because there's a red candle and there's something candle, and we don't trade based off on the colors of the candle. That's not what we trade with. Period. Right? We don't trade based off on candle colors. No, that's not a strategy, right? That's a strategy. This will lead 10 out of 10 to emotional decisions, inconsistency with your profit, and confusion during market swings, right? We build and follow a clear trading plan with defined entry, exit, and risk rules, right? We're not going to do that. So for us, right? For us to be successful in this environment, in this space, right? We will only do this. We will only do this with a proper trade plan, right? Number two, novice mistakes, right? Number 2, risking too much on one trade. Everything here, I've done it before, right? And I don't want you guys to commit the same thing. I've done it before. Risking too much on one trade, going all in. Your trading capital is $100. Your trading capital is $1,000. Your trading capital is $2,000. Your trading capital is, $10,000. You say, I'm good now. That's my life savings. This one, I want to change my life overnight. I want to become a millionaire overnight with this one trade. Going all in on one single trade, hoping to hit a big, hoping to hit a big, right? This is going to be one bad move that will wipe out your entire, account, right? And so number two novice mistake that we will avoid as traders, right? Is going all in on one single trade and hoping to hit big. Nah, we're not doing that, right? We're not doing that. Yeah, we're not going to do that. We will only risk, 1%, 2% of your capital. That is what we will risk per trade, right? And as a matter of fact, when I get into risk management proper, I have a strategy that will ensure that, you will have to lose about 100 trades, with each trade taking, being a loss for you to lose your money. And I have another risk management strategy that as a matter of fact, you don't have to take about 400 trades, and you have to lose all the 400 trades to lose your money. And so I have proper risk management framework or model that will ensure that, you don't lose your money. Okay? That will ensure you guys don't lose your money. So risking too much on one trade, that is something that we're going to avoid. We're not going to do that. We will not do that. Right? Number three is ignoring risk management. Ignoring risk management. This is a wild and big mistake. You're going to go into a trade and you don't have a stop loss. You're not using stop losses or ignoring reward to risk ratio, etc. That is, you're totally ignoring risk management. Without risk control, small losses can turn into account killers, right? If you don't have a stop loss, if you don't have things like that, by the time you realize all your account has been wiped out. All your account is what? Wiped out. And that's it, right? So use stop losses, aim for reward to risk ratio of at least, 2-to-1, 3-to-1, 1-to-1. We will talk about all these things proper when it comes to trade management, etc. We come to that session. But ignoring risk management, guys, that is going to be a disaster for you. All right. Number 4 is over trading. Very dangerous. That is danger ahead. Over trading, right? Over trading. Over trading means what? Taking too many trades in a day. Taking too many trades in a day, often out of boredom or greed, right? See, when it comes to trading, you need to have a plan. And your plan can be, hey, I only take maybe 1 trade a day, 2 trades a day. I'm not going to take 5, 6, 7, just because I'm bored and I'm looking at the chart and I'm looking at certain things. I'm saying, oh, let me just jump in. I see something over here. No, right? If your trade plan is 2 trades or 3 trades per day, or your trade plan says that if you lose 2 trades a day, that's it. That's the end of the day. You're not going to trade anything else a day. You come back tomorrow. Stick to the plan. Don't overtrade, right? Don't overtrade. Look, everything over here, I've done it before. There are days that, you make so much money and then you end up giving whatever money that you've made back to the market. Why? Because you are over trading. Your confidence is so high. There's something we call, I don't want to digress, something called dopamine. When that chemical is released into your body, nobody can stop you. There's a chemical that is called there's a chemical that is called dopamine, right? When dopamine gets into your blood system, nothing can stop you. It's like, falling in love. Nothing. He said, don't go there. I'm just coming from that side. When dopamine gets into your body, nothing can stop you, right? When you begin to have some wins, 1 trade, 2 trade, 3, I say, oh, today your mindset is that today is your better day. The gods are on your side. Look, that is the devil talking to you. right? I'm going to tell you that is a devil talking to you, right? That is a devil talking to you. You know, when you have one trade, good, second trade, third trade, you're like, oh my God, today is my lucky day. Look, you got to stick to your trade plan. If your trade plan says that you're taking 2 trades a day, 3 trades a day, that's it. You are done. Don't sit down and the devil is going to find work for the idle hands, and then you will lose all the money back again. So over trading, I've done this before. There are days that I started in the morning. Then quickly I'll make almost about I'll make my trading goal. If I need to make about $1,000 a day or $500 a day or whatever. You make that money, and then you come back in the afternoon and then you see something like, isn't this an opportunity right there? That is over trading. Calling you, calling your name, and that often is going to lead to what? You're going to lead to poor decision, emotional stuff, and you're going to lose money. You're going to lose the money that you've already made. So don't do it. Don't do it. And then when maybe a day the trade does not go well according to plan to, then you want to go out there and say, no, I'll get my money back. No, forget it. There's always money in the market every day. All right, let me repeat that again for somebody listening to me. There is always money in the market. There's always money every day, right? So don't overtrade and say, I'm going for my money. I'm going for money. Or don't overtrade and say, today is my lucky day. Today, everything. Today, I think the angels are on my side. No, we gotta have a plan. We are not talking about angels here. We're not being religious here, right? We are not being religious here. The angels are not on your side, right? You gotta stick to the plan, right? Other than that, this is going to lead to poor quality trades that you have not planned, because every trade you set up in the morning, then you execute your trade. But if you're going to be, over trading, 10 out of 10, you're going to be losing money, right? And then point number 5, chasing the market. Chasing the market. FOMO. FOMO, FOMO means fear of missing out. When you hear everybody saying, "Oh, today I made $2,000, I made $3,000 today, I made $1,000 today," I find out you're like, I'm the only person that's not making it. Let me go ahead and if there's any trade somewhere, you just want to go ahead and jump into the market immediately without a plan, without nothing. FOMO is catching up on you. That is fear of missing out. Right? You feel like you're missing out. You're missing an opportunity for the day. Everybody's making money. People have made $2,000, $3,000, whatever, $100, $200, $500. Why am I not making something? Fear of missing out, right? Jumping into trades after a big move out of fear of missing out, right? Often result in what? Entering at the top or the bottom of the move with what? Poor risk reward. Guys, it's going to happen. Everything over here, I've seen it, I've lived it, and that's why I'm saying that the first mouse gets the trap, the second, third, and all the other folks that come after that, they get the cheese. I want you guys to get the cheese. Don't go and do any silly, commit any silly mistakes, right? As I've listed here, right? Fear of missing out. Fear of what? Missing out. I've lost, 2017, all these things, it's coming from experience. So today I'm able to do the things that I do because why? I've paid school fees. Let me use that word. That's what I'm trying to say. I've already paid my school fees to the market. But I don't want you. Recently, I think about last month, something, I was writing something on Facebook on leverage, and you don't necessarily have to fail to learn. Guys, you don't necessarily have to fail. You personally have to fail to learn. You can leverage on other people's failure. And that's why some of this training is very important, because where I fail is what I'm pouring it out to you guys that don't do it. 2017, after 2017 or somewhere, I lost almost about more than $50,000 in this market. Why? Because as a matter of fact, as of that time, I've not even gone for better training, education, and I've not done that kind of investment in my education. And I was just doing it based off of emotion, fear of missing out. Everybody's saying Bitcoin, everybody's saying this alternative coin, everybody's saying something else, and you're just hearing voices here and there. You put the money in there, 10,000, 15,000. Recently, I think about 3 months ago, I was doing something. I was researching something. I went back to my bank account statements around that time, and I almost cried. I'm like, oh my God. So I sank all this money into the market just like that, right? And men, as we are sometimes our wife will be saying, take your time a little bit, and we are not going to listen. We say, no, 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 no. Fear of missing out. I can be a millionaire overnight. When the market moves, just some small movement, it can change our life. And it changed our life, but it was not for the better. Right? So I don't want you guys to do the same thing. For real, I lost over $50,000, in that, right? But it was just purely based on what? FOMO, fear of missing out. I'm the only person that's not going to miss out on this. If I buy it right now and it moves in the next 3 months, something, we are rich, right? Don't do that. Don't chase the market, right? On a big move that, hey, it's moving up, so let me catch in on some, right? No, we do our analysis as professional traders. We do analysis and we know exactly where to buy, where to sell, where to be out of the market, right? That's why training is essential, right? Leverage on other people's failure, right? I think I talk about a lot of leverages, about 9 different type of leverages. But guys, if you want to read that, it was a good, write-ups. Go and read that. All right. Point number 6: buying high and selling low. Buying high and selling what? Low. When you don't understand this market, and somebody tells you, "Oh, go and buy Tesla. Go and buy this." What they are telling you, it could be right, but what they don't know is that because they don't have the knowledge, the technical knowledge to be able to read the chart and know that where the price has gotten to, price is definitely going to sell, right? It's going to come down. So that means you took advice from somebody at maybe a dinner table, where maybe like a Thanksgiving dinner table, your uncle is telling you, and your uncle is telling you, hey, go and buy this, go and buy this. You will go and buy the price, and one stock price is like maybe $300. And you pour all your 401k and your savings and everything to buying that high price of maybe $300 per share. And then suddenly, because you don't have technical analysis like what we're about to learn in this training journey, to do that, where the price is right now, price will be declining very soon. So you are buying high. And then when you see that the price is now falling, then you will now begin to cry, like, okay, let me sell. You will sell it out of panic. But what are you going to do? You bought it high and you are selling it low. That means you are losing money. So let's say you bought it at $100, right? And all of a sudden you see that the price is declining, it's going down. And then it come all the way down 70. You say, hey, no, Charlie, this thing, the price is going down. I'm losing the value of the stock, right? You bought it so high. That's why you were trying to go long. And the price come all the way down to 40. Guess what? You've lost 60, right? Because you bought it at 100. And when the price was 100, that's where you wanted to buy, thinking that it was going to go up. Not knowing that, because you don't have technical eyes to see that where it is right now, there is a supply over there. And so when price get to that 100, it's going to start falling. Because you cannot read it, because you don't have the knowledge. There's a knowledge gap in there. And that's why this training exists, right? So that you'll be able to read the chart yourself. Nobody's going to read that. You can read. You'll be empowered to read it yourself and know that, oh, I can see a supply sitting over here. And when price goes up to over here, it will definitely come down. And indeed, it will come down. We'll see examples of this, right? So you don't buy at a high price and then sell because of fear and panic, because you know that the value is diminishing, it's coming down. And so out of fear, and now you want to sell it, right? That's not what we want to do. We want to buy low and then sell it at a high price and make profit, right? Because we understand the chart, we can read it, right? So buying high and selling low, that is one also novice mistakes. That you don't have to do that, right? And that's what this education says. You will read it yourself. You understand it yourself. This is the opposite of profit trading, basically, right? This is the direct opposite of what? Profit trading. You're going to buy something at a high price and then you come and sell it at low. That's not profitable, right? You rather buy it at a low price and go up with it, right? That is how you make money, right? That is how you make money, So buy near demand zones when price is lower and support, is strong, and then sell where there's supply sitting over there. But how would you know? That's what we will do analysis. We will begin to know some of these things, right? So you buy low, you sell high. That's a principle, not the other way around, right? That's like giving money away. That is not a good profitable business, right? Giving money away, right? So the 6 novice mistakes, guys. I have lived some of these things. I've lived it myself in my journey. And why? This is why I document them so that you guys will not have to fall for this, right? You guys don't have to do this and get into the same trap. Okay? All right. Let's move on. Let's talk about risk management a little bit over here. Let's talk about risk management a little bit over here. Um, talk about risk management, and after that, I'll open it up, for our questions. We have only about 8 minutes left or so. Let me talk about this quick. Or, as a matter of fact, let me end it here, and then tomorrow we'll kick off with, let me end it here with the novice mistakes, and then tomorrow we'll kick off with the risk management. All right, we'll start off with the risk management thing. I wanted to end this. Okay, it's fine. Okay, all right. So we will. I'm gonna give you guys the chance. Like I said, if you started from the beginning, I on every session that we have, the last 10 minutes is for questions, right? Last 10 minutes for questions, and then you guys get to ask the questions, and then we'll take off again tomorrow. This is a lifelong skill. Like, guys, it's not an overnight, skill set. It's a lifelong skill, right? So let me unmute you guys. You guys will have the opportunity to ask questions now. Um, and then we call it a day. And then tomorrow we'll kick off again. All right. So feel free to unmute yourself. Feel free to unmute yourself. We have only about some few minutes to 7 minutes, and then take questions and whatnot. And then we kick off again tomorrow at 4 p.m. Right? So at 4 p.m. That's our time. All right. So questions. I'm ready to take them. Questions, guys. I'm ready to take them. Are there any questions? I hope I didn't put anybody to sleep, right? Hopefully, I didn't put you guys to sleep, right? I didn't put you guys to sleep, right? Because I don't think I'm a boring teacher. I don't think I, I don't think I'm a boring teacher, right? So I didn't put anybody to sleep. All right, questions. Anybody? And then we'll wrap up for the day, and then we'll take off again tomorrow. Any questions, guys?
Yo, praise the Lord. And I said, teacher, good morning.
Yeah, morning.
No, you didn't put us to sleep. Thank you very much for the day. So my question is, you caution us to be sticking to the plan if we start trading. Like if you want to trade 1 or 2 a day, stick to the plan. If you have that is your plan. Does it also mean that the time that you trade matters? Like morning, evening, afternoon. You have to be consistent with the time too.
Yes. Yes, so this is going to be part of our trade plan that we will work on. So our trade plan will include, the times, the sessions that we'll trade. So we have, the London session, the New York session, the Asian session, and other sessions around the world, right? The New York session is the session that starts at 9:30 a.m. Monday to Friday and ends at somewhere around 4 p.m. And then the London session, if you are in America, as an example, the London session will start around your 3 a.m., around that time, and then end somewhere around your midday, 11 a.m., 12, and it's already like 4 p.m. in London. So London training session is closing, right? And Asian session is like your night, because when you are about to sleep or whatever, it's already morning in Asia, So the time of the day matters. We will talk about volumes, we'll talk about liquidity, we'll talk about other things, different topics, because when you are trading, you want to trade at the time that a lot of other people in the world, they also trade at the same time. And that brings a lot of volume to the market, right? You want to trade when, that session is not really that strong. Like for me, I don't really trade the Asian session that much because why? Because they don't have a lot of volume, right? I typically trade, at the intersection of New York session and the London session. And that is basically around the, 9:30 a.m. to like 11, 12 a.m. PM American time. That is where there's a lot of volume because that is a time that the London trading time and then the New York trading time sort of intersect. They sort of overlap on each other, right? Before the London
Okay.
session will close at 5 p.m. So trading time, to your question, trading time matters a lot in this journey.
Okay. All right. Thank you.
Yes. Anybody else? We still have about 3 more minutes to wrap up for today's session, and then we'll continue with tomorrow's session.
Yeah, I had a quick question.
Okay.
So yeah, well, thank you for everything that you explained. Everything was very very helpful. But I joined a little bit late. I don't know if I missed it. So today was just information about like just knowing the market, just understanding and having a better knowledge of what to do when it comes to trading. Right. I'm not sure if we went into charting. Is that
No,
something
no,
that
no.
would be later?
We have not gotten anywhere. This is just foundational
Oh,
stuff. This is just foundational stuff.
okay, okay, perfect, perfect. I just wanted to understand. Okay, 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 okay. Oh, I just want to understand. So that's my question right there. But thank you for everything
Yeah.
that you explained today. It was very, very helpful.
Yeah. All right. No problem. Yeah, we still have 2 more minutes. Ready to take your questions, and then we'll wrap up for the day, and then tomorrow we'll take off. You guys have any question? Chief, Derek, Gifty, Maxi, Nana Kofi, Rosalind, Sam, and then Sammy. Everybody good? Everybody straight? All right. You guys are all good. Okay. All right. All right. So thank you guys. We will be here, at the same time tomorrow. So the Saturday's morning session is 3 hour session, and then the Sunday evening or Sunday afternoon session is a 2 hour session, right? From 4 to 6, and whatever time that translates into. I know I have some folks joining from London, folks joining from Canada, folks also joining from the other European time as well. You just have to do the conversion right, right? For this batch, the October batch, about 16 or 17 people or something like that in there. Some of them were not even able to join. I can see, but of course they will watch the recording as well. So yeah, make sure that you have the timing right. You're converting the time. You're on the right side of the time, so that you're not late. Like I said in the beginning, you got to be on time, guys. You got to be on time. You cannot come in late. You cannot come 10 minutes late, 5 minutes late. No, you're going to be missing a lot. So make sure that, you come in right on time, and then, we get down to business. All right. Thank you all, and enjoy your Saturday. Bye for now.